ICT is one of the most popular trading strategies out there. It seems like every new modern day trader is using ICT. What really is ICT? So ICT is an influencer who goes by the name of Inner Circle Trader. He's on Twitter, YouTube, all that good jazz, and he has revolutionized the trading game for people, almost all traders these days, using his concepts and his strategies. See, I used to be one of them. I was somebody who used ICT. I was somebody who fell for the TikTok, use ICT. ICT concepts are the only thing that works. You're never going to make money unless you use ICT, etc. I fell for that, and it only made things worse. So I'm going to explain to you why I stopped using ICT, how you can potentially improve your trading if you choose to stop using ICT, etc. I want to make a disclaimer that if somebody is profitable with ICT, I am not telling them to get off of it. I am well aware that people have different trading strategies and different things they do. I am not the type of person to say that you are only profitable if you use this strategy and this and that. No, if you are successful with ICT and it helps you, use it. I am just telling you what helped me, and if somebody really needs help in trading, maybe this video is a good video for them to come across. I want to start off with what are the ICT concepts. We have things like liquidity sweeps, fair value gaps, breaks of structure, all these concepts, okay? Order blocks. These concepts have been in the trading for a while, since floor traders back on Wall Street, etc. All ICT, Inner Circle Trader, has done has taken these concepts, revamped them into new names that he has created, and used it to market himself as a trading influencer. And many people believe that, oh, ICT created these concepts. The reason we have trading is because ICT created these concepts. Absolutely not. These concepts were well in place. Supply and demand, support and resistance, imbalances, liquidity, all these things were well in place a long time ago for traders. ICT, all he did is take them, rebrand them with his own names, and start marketing with them. So what I'm going to do is take you onto my chart, tell you exactly why I stopped ICT, using examples to show you, and show you 3 trading strategies that have helped me go from failing and continuing to breach fundeds to fundeds and printing tens of thousands of dollars of payouts. So looking at this Google Doc here, I've created and outlined some certain things that we can go over in today's video. The first thing is actually understanding what ICT concepts is. And to me, this is simply too many concepts. And as you guys can see in the parentheses, I write for me. That is because if it works for you, continue to do it. As I said in the beginning of the video, this is only for somebody who might need the help, okay? But for example, this chart right here, I'm not saying this is all ICT traders. I'm not. But 9 out of 10 of them that I see, they have all these different order blocks and boxes and liquidity sweeps and fair value gaps. I mean, look at all of this on the chart here. That is a lot right there. And for a new trader who's trying to learn and struggling, that is a lot for somebody to go through. So I want to outline a saying that you might have heard before, but really helped me when I was going through my learning process of trading. And that is this saying right here: simplicity equals profitability. As you can see up here, I write ICT concepts equals too many concepts for me. For me, simplicity equals profitability. So let's actually take a look at the chart here. This is gold on the 1-minute chart. So for example, if we were up in this area right here, we'd have people say, oh, this is liquidity right here. And then we'd have to, have a break of structure right here. And then we'd have to create, a fair value gap right here. And it's like, that's a lot to do just to execute one scalping trade. So now that I'm back on here, I showed you guys, that's a lot to do to execute one scalping trade. There's a lot of concepts. If you look at how this chart is marked up, you have things like even a turtle down here for total soup. You have CISD. You have all these things that ICT has created and marketed himself as that now traders feel like they have to use, and if they don't use them, that they're not going to be successful. So I'm actually going to take you through 3 strategies here that really helped me, okay? You should narrow down to one strategy that really helps you, but any of these 3 simple strategies have really helped me. Let's first talk about the orb. So here on the gold, the first thing I like to do for orb is realize the time frame I'm going to be using the orb on. Opening range breakout is what orb stands for. My favorite type of orb to use is the 15-minute orb, the 15-minute opening range breakout. So what does that mean? You come into pre-market and you are waiting for the first 15-minute candle to close, okay? So what would that be? That would be this 9:30 candle right here. So what are we going to do? We're going to mark out the bottom wick of that first 9:30 blue candle right here. Find the candle that says 9:30 a.m. That's this blue one. Then what you're going to do is you're going to mark out the top wick. It is the top and bottom wick of the 9:30 15-minute candle. Then what you are going to do is switch down to the 1-minute time frame. Okay? And you are going to wait for a breakout. So the first breakout we get and close under. The candle for me has to close under or above the line, the breakout line. So this is the first move we get right here. A close below, and it continues into this move right here. Okay, that's good. Now, a lot of traders would make this mistake of entering because they see a break and a close and then a retest with this little blue candle, and they'd enter right here. Oops, that's the wrong box. They'd see that little blue candle as the retest, and then they'd enter right there. Stops would go somewhere above here, and they'd target like low of day down here, and see they'd get stopped out up here. That is not a real breakout, okay? The real breakout and the real retest comes from this move as well down here. Not just this simple move right here and this blue candle as the retest. No, we are looking for a real distributed move to the downside, like this white candle right here, and then the pullback. And then what you could very much do has entered right here, first rejection and retest off, and you even could have gotten low of day and more. So that is the orb strategy right there. And let's actually go into back testing one of the days of the orb strategy. All right, so now that we are here on the charts, I'm going to be outlining through a back test how you can look to potentially take the opening range breakout of the 15-minute candle. So the first thing you can see up here is actually that we are at 9:45. So this is the first 15-minute candle printed of New York session right here. As you can see at the bottom, it says 9:30 there. At the top, it says 9:45 here. So as I stated on TradingView, we are going to take a line and we're going to mark out the top wick. We're then going to take a line and mark out the bottom wick. This one's a little bit tight, so we have to do our best. Then we're going to go down to the 1-minute time frame. We're going to look for a breakout. And when I say breakout, I don't mean this and then this. I mean with a real breakout, this and then this, you know, something like that along those lines. It doesn't obviously have to be that large, but you know what I mean when I say real distribution of candles. So let's go. Okay, something like this is a good breakout. Can we get okay, nope. Price closed back above the blue line here, which means we have to wait for either price to break out up here or come back, re-break out and retest. You know what I meant. So we'll either wait for those two things. Once the candle closes above, it invalidates this previous breakout. You need to wait for price to come up here and break out for a long, or price needs to come back down and retest. So let's see what we get. Okay, so we get a breakout here. Price closes. Let's see. Okay, so this is a pretty good distributed move right here. We get 3 candle closes above. This candle had significant volume. Now we're going to look for a retest and rejection of the orb resistance newfound support. Okay, so we get a pullback. Okay, perfect. This is exactly what I want to see. I want to see a retest, a rejection, where sellers tried their best to push the candle to the downside here, but buyers said, absolutely not, and they turned it into a bullish candle. So what we're going to do is we're going to enter this trade. We're going to have stops just below here. We'll target something up here just like this, and we will see. And there you go. That is the orb strategy. The next strategy I want to go over that really helped me with my trading is supply and demand. Supply and demand gets a lot of hate these days, especially from ICT traders themselves. They call supply and demand traders frauds, that people can't trade, etc. Meanwhile, supply and demand is one of the first concepts that traders use. My father was actually a Wall Street stockbroker for his first job, and supply and demand of markets is something that they used. You know, where are sellers getting in? Where are buyers getting in? You know, I want to be in with the bulk of what is happening. If a buyer or a seller or a big whale is here, why would I not want to be with them when I'm going with the market? I'm not trying to move the market, I'm trying to go with the market. So a supply and demand, all it is just an area of huge selling or huge buying. It's the candle before that. So what do we have here? We have right here a huge move to the upside. How many candles is that? That's 1, 2, 3, 4, 5, 6, 7 candles in a row to the upside. Okay, so what are we going to do? we are going to take our box tool here. Here's what I like to do. I like to take the candle before the move. So we have 7 bullish candles in a row. I'm going to take the bearish candle before that. I'm going to go top wick to bottom wick here of this move, and that is my area of demand. Obviously, you can see the zone did not hold here. That's a part of the game sometimes, but this is what a clear area of demand is. A clear area of supply, what do we have here? We have 1 bearish candle, 2 bearish candle, 3 bearish candle, 4 bearish candle, 5 bearish candles in a row. And so what we'll do, we'll take our blue bullish candle beforehand, go to the top of the wick here, and as you guys can see, this zone right here actually did hold. So, like, you know, this one didn't hold, but this one did hold, and we get the move back down after the retest. That's just the game of trading sometimes. So now what I'll do is I'll take you on to my backtesting platform, and I'll show you a live supply and demand trade. So now here we are on the charts. As you guys can see, it is 9:25. Obviously, you don't have to start at 9:45 for this one. Supply and demand zones can happen anytime. This is not like the 15-minute order where you have to wait for the first 15-minute candle. So what we're going to do is we're actually going to play this forward. And I want to point out that these can be done on any time frame. Whether it's the 15-minute orb, you mark out that first 15-minute candle. You can enter on any time frame, really, if it fits your strategy. Same thing here. The orb strategy, I entered on the 1 minute. This one, I'm going to be trading the 5-minute. Whatever works for you, do so. So already here, we get the 9:25 candle right here, 9:30, I'm sorry, and boom. Okay, a huge move to the upside there. Okay, so yeah, that's a great move there. A lot of volume in that candle, a big move. So what we're going to do is we're going to take our tool and we're going to mark out our area of demand just like that. So now all I'm looking for is price to pull back into this area of demand, reject this area of demand, so we can take the continuation to the upside. So let's see what we get. Price pulls back in, we get a tap into the zone. Okay, perfect. Would you look at that? Exactly what I wanted to see. The rejection wick shows me that sellers tried, buyers didn't let it happen. Oh, oops. So yeah, that's what that shows me. And what we will do is we will end up entering this trade right here. Go for a small. I like to scalp 1-to-1s. You can do whatever risk to reward fits your strategy. Okay, good move already. And okay, there it is. So price ends up hitting take profit. And that's how you trade supply and demand. Supply is opposite way. You know, price comes up and retests an area looking to continuate the sell down. This is a demand example. Lastly, I'm going to outline one of my favorite strategies, and that is actually support and resistance, okay? Again, just like supply and demand, a lot of ICT traders and other types of traders will make fun of support and resistance traders, call them frauds, call them people that don't know how to trade, etc. But once again, I sound like a broken record, but my father has always told me that support and resistance, supply and demand, those were the things they used on the floor. So these are terms that have been here, guys. So we're just going to go over support and resistance. What is support and resistance? So for support and resistance, I like to start on the 15-minute time frame or the 30-minute time frame and mark out my areas. All support and resistance is areas where price continues to hold or continues to bounce off of. So let's draw out a little chart up here. We got something like this. Boom, 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 boom. Okay, so price continues to hold. Touch here, touch here, touch here, and touch here. Price continues to hold. So what would that make that? That would make that our area of resistance right here. Vice versa, we get a bounce here, a bounce here, a bounce here. That would make this our area of support. And then you could take trades off these areas because price continues to bounce off of them. So let's actually look at TradingView here. Right here, what I see here is a marked up area like that. Price continues to bounce off there. Price continues to bounce off something like that. These are simple areas of support and resistance. I'm not saying like as you can see, price continues to hold off this area here. It was resistance here. It turns into newfound support there. So when price comes back down and retest, you could get in off this engulfing candle, stops right here. You could ride your trade up to this next red line and take profit up there. Just something simple like that. So let's go back test support and resistance now for our last strategy. All right, guys, so here we are on the charts for support and resistance. I'm going to be starting on the higher time frame, being the 15-minute, and actually entering my trade on a more scalping time frame like the 1, 3, or 5-minute. The reason I like to start on higher time frames is because higher time frame areas always get respected more. It is way easier to mark out a support and resistance zone and trust that that zone will hold or continue with your break and retest play if it is on a time frame 15 minutes or bigger. A lot of the scalping support and resistance timeframes, it's really hard to scalp those. So I like to start on the 15-minute time frame. So let's just get into what I see here. So I see touches in this area here. Got bounces here, and if you were to draw like a box right here, you could see all the bounces there. So clear area there. Same thing here. We have a clear area up there. Continuous touches here, a touch there that gave us a move down. So this is our trading range for the day of support and resistance. Now what we'll do is we'll mark out, we'll head down to the 5-minute and look to execute the trade. So bang. Okay, perfect. I like this trade. I do. A lot of people are going to say, Jake, that's a long wick and a big candle. Your risk to reward is not going to be that good. That is okay. I am just explaining to you the basis of support and resistance, okay? I like a position like this. I like to see that wick. I like to see that bearish volume, okay? I'm aware of the risk I am taking. Be aware of the risk you are taking, okay? Now, would I 100% take this trade on live time charts? I'm not quite sure, but to outline support and resistance and the qualities that you are looking for in a position, this is an okay trade to take. So let's see what happens. Oh, wow. Okay. That's a big move. So I'll probably end up moving my stops to break even here, and I'll probably look to play out the rest of the trade just like that. Okay. So yes, I understood the risk that trade, but I understood as well that I just want to show you guys the quality of support and resistance. We got the buyers that tried to push it up above that resistance zone. The seller said absolutely not. They pushed it down with bearish volume. So yeah, guys, I hope you guys enjoyed today's video of me really explaining why I stopped ICT. Again, no hate to anyone that trades ICT. My content is about spreading the gospel and simply helping people. So no hate to anyone that trades ICT. If it works for you, it works for you. But for me, if anyone just needed a simplicity equals profitability way, that can help you get funded. I promise you, you don't have to trade ICT. I know it's popular these days. I know a lot of people get made fun of if they don't trade ICT. But guys, I'm telling you, simplicity equals profitability. So I hope to see you guys in the next one. Make sure to like and subscribe, share the video. I'll see you guys soon.